Institutional order flow. It is a topic that many other traders have covered. I believe that we have the simplest and most logical explanation of how to find it and how to trade it. So let me give that to you and you guys can be the judge. And I suggest you stay to the end because we're going to have some examples. Now, what is it, first of all? Well, institutions is just a word for banks or funds or money management, anything. And what they do is they fill orders. So they might get some news, be like, hey, our analyst just said like this, and this. We need you to buy 500 million shares of Lockheed Martin. And you have to do it this month. It's like, all right, 500 million shares this month. What would that look like? Well, if you look at a chart, it would look like this, just going straight up. So you can see it after the fact. What tells us this is going to happen before the fact? We talked about it last Tuesday on the Strat Attack. Well, what tells us that is the monthly signals, first of all. And second of all, the confirmation of those via the buyer entering the market early in the week and then coming back to buy more the second day. So they buy once, come back to buy more. This same idea applies to the weekly. If we're trading a monthly or quarterly move, what we want to see is they buy the first week of the month or the quarter, and then they come back to buy more. Because what that tells you is they have more to buy. So what we're picking up on is not that they have to continue buying every single week this month, but we have confirmation of the fact that they actually need to fill more than just a week's worth of orders. Like, it's not a small trade, it's a big trade they're putting on. And if those are the guys that move the market, we want to know about that. So the way we pick up on this, we do it on the weekly basis and we do it on the daily basis. And both of those are going to be confirming the monthly. So we first want to look for our setups, because what our setups tell us is of crowded positions that are getting reversed. So one of those setups is a 3, 2 down, 2 up. And if you don't know what that is, a 3 is a bar outside of the previous range. What this shows is aggression, because they're willing to buy up and sell down. And it's not retail traders. This is institutional traders. They're willing to buy it up and someone's willing to sell it down. So they're very aggressive. The next thing we look for is a 2 down. So a trend in one direction, lower lows and lower highs. So we have an aggressive participant in here that's obviously countering buyers because they tried to buy it up. Some aggressive seller stepped in and sold it all the way down. When this goes down and then comes back into this range, they might do that again, meaning they may sell down and then buy up. So whoever this aggressive seller is that got short, we're coming back through them and they have to close. So what that does is it sets us up to have a losing position against our long trade, which we talked about last week. Is LMT, mentioned it briefly today, but 322 back up, ran out of time, but 322 month in force. So this one could start waking up, going to 46.6 or 466, and that tells you to look at NOC, which is an inside week up in the week. So that's our plan if things start coming back in. If they don't, then we're going to continue buying energies because those stayed up, and then we'll continue buying industrials, which we talked about in the Tuesday night video. We saw NOC taking the week up, which went inside on Friday, and we saw LMT reconfirm everything. So we had the 322 on a Tuesday, and then Wednesday we can go in and buy the continuation to take these guys out, and then it keeps going. And what we know is that on the month, that's a 322, still has some range, and we have wars going on across the whole entire earth at this point. So they're probably going to get more money, right? So what we then look for is on the weekly. We can see this week, they came in the first week of the month, and they took out last month's highs here. They came back again the second week, 2 up. So new highs. So they bought the first and the second week. Is it very aggressive at that point? No. Wasn't really something we were talking about. But what we saw was this. Notice the 2 down. So someone sold, but then it went green. What that tells you is an aggressive buyer just countered whoever came in to sell. So now we have an aggressive buyer entering the market here. On the daily basis, what this looks like is a 2 down on Monday, where you can see the seller takes last week's lows. So someone sold Monday. Tuesday comes here and negates that, because each move will either be confirmed or negated. Since this was trending down before, now it's trending up on a Tuesday. They've negated the weekly seller that came in on Monday. And how we can quantify that is they were below the weekly open on Monday. Now they're above it. So anyone that shorted Monday has to get out. And we have a buyer stepping in. So at this point, the week is green and the month is green. The only way that can happen is if you have a buyer that's aggressive, that's buying this month and this week. Period. Because if the sellers were more aggressive, it would not be green on the week or the month. Right? And this reversal of Monday's selling negates anyone short in the direction of those buyers. So they definitely have to close. And the way we pick up on this is once we've seen this happen here, we can trade the reversal of this above this here. Anytime above that weekly open, we can buy it, targeting last week's highs. What we do scan for, though, is on Tuesday night, who negated and also who's confirming Monday's move. What we also noticed when Lockheed Martin did this was that NOC, Northrop, did it. And you'll see on Monday, they actually went inside. So they were stronger than Lockheed Martin, which means the buyer was in here Monday. Tuesday, it makes new highs. So that buyer steps in. And then they come back to buy more Wednesday. They go 2 up again Thursday. It was red, but it was 2 up. Higher highs and higher lows. So that buyer's still in here and still in control of current price direction. They go inside, so it's not a reversal. They go 2 up again. That's a continuation. Still these 2 bars inside of that, but that's still reconfirming the buyer. And then here, they buy again. What are we thinking at this point? It's like, well, there's a seller here, somewhere around like 472. They're getting out of position. But once that seller is gone and these buyers have this big buy order to fill, once those guys are gone, it'll start taking off, and it does. You might look at this and be like, it's a consolidation breakout, which it is. These 3 inside of that. So a 3-day consolidation that broke. You get 1, 2, and then potentially 3 days to confirm that. But it's really just some participant selling we don't know about, and eventually they're gone and we keep going. The other thing we noticed was GD. So Monday they bought GD. Tuesday they came back to buy more. And this is also part of the War Machine stocks. We also notice RTX. Monday they bought RTX. Tuesday they came back to buy more. They did have some corrective activity, never changing the weekly color, so the buyer is still in here. But we have all this information pointing upwards across all of the big War Machine stocks. So we call this a simultaneous break, where they're all breaking last month's highs simultaneously. RTX, NOC, GD, and LMT. So they're buying all of them, which means they just want war stocks, which tells us what? They probably have more to buy because they're literally buying across the board. They're buying them. So when this reversal happens on the month, next month, since the month's over, we want to come back into all these guys, back to like 500, ideally. Does it mean it has to? No. But if they come back next month and they're 2 up again, they're still here. They bought this month and came back for more. So hopefully you're seeing what we're seeing and starting to think a little bit like we think. We can also do this on the gappers for those of you that are following the current video series. When the range is big enough, like so, you can see we're identifying our 3. These are all an outside bar of all this stuff. So if we were looking at a higher time frame, notice the month. See how that's a 3 of this? This is how we gauge magnitude. Because if we fail down here, that buyer came back. It's trying to go back up there again. The same way LMT is the 322. This is just happening all in 1 month. So on the week, this is the 3. These 3 bars, and outside of all these guys. This is the reversal and a continuation all in one. Because it was making lower lows. Buyer showed up. Now it's making higher highs. And then above this, it's continuing to make those higher highs. So all in one, this outside bar is doing all those things. On a daily basis, we can see gap down, buy on Monday. What do we want to see? Do they come back again to buy more Tuesday? They did. Slight higher highs. They bought, just didn't go anywhere. Wednesday, they come back to fill more orders. Thursday, they come back to fill more. And this is the end of the week. So they bought Monday, Tuesday, Wednesday, Thursday. The only way that happens is if they buy Monday and then come back Tuesday again. And then you get the Wednesday, Thursday to really get after it. So hopefully you can kind of see what we're thinking. This also happens not only on Monday and Tuesday, but in general across any market ever. Notice Wednesday, 2 down. Tuesday, reversal. Or Thursday, reversal. They confirmed that on Friday. So the buyer bought and then came back to buy more. Where's that going? Up there. Because all of these bars went outside of all this stuff. So if we draw that one out, you can see even here, this is how we gauge magnitude. Slight lower lows, slight higher highs to all this stuff. Buy, came back for more. Where is it going? Up there. Came back for more. Boom, on a Monday. And then notice, now everyone is long. Because we stopped out anyone that was short, taking out all these guys. So it's a crowded position once you're going into new highs. What that means is you got to watch out on the downside. 2-2 on a Tuesday. So they negate what Monday did. And you'll see they kind of grind around in here. Can you trade this stuff? Yeah, but we want the bright green bars coming back through a previous range. And this method of thinking will put you on those. So hopefully you're seeing what we're seeing. Other ways we can do this, TSM. This was an example here from a long time ago. And we can pick out which ones that they are not selling when things are weak to go and buy when things are strong. So this was something we talked about. If you go into the weekend video that was over, it was going into February, something we talked about. We said this will be the strongest semiconductor stock next month and next week. And we are absolutely correct. Ran all the way to 158. So what we saw is, well, they buy, came back again to buy more after earnings. So very green, good earnings. Inside week. The reason this is important is we didn't take last week's lows. If we go and look at the SMH on the same week, Monday, 29, January 24. Monday, 29, January 24. See how this went 2 down? What that means is the sellers did come in here and try and sell that one. The one that they didn't successfully do that to is TSM. So someone's sitting here and they're like, I'm just sitting on the bid trying to fill orders. The next week opens. When this equilibrium inside bar breaks, now we know that buyer is taking the offer. Because the only way that you get outside of an equilibrium or consolidation is if someone takes the offer. And we're also in the right place at the right time because at that point, you're taking last month's highs, and that's been reconfirming for many months. You're also taking last quarter's highs, inside quarter breaking. So we know they took the offer at the beginning of the quarter. And the 3-1-2 year. So they buy up and sell down, inside bar, they break that as well. So you have multiple confirmations of the fact that the buyer's in control at that point. And that weekly signal tells you it's going to happen right then and there. And then we can confirm that the same way. They buy Monday. We can buy 2 if we would like, since we expect so many things to happen. Tuesday, they buy again, but it comes red. This is a great thing to see because if they come and buy Wednesday, whoever shorted Tuesday is now liquidity. Boom. Wednesday, they buy. Thursday, boom, they buy. And then you can see everyone long, crowded trade, because you're going into all recent highs on the daily. 2-2. This is where you get out of some of that position. Then, new broadening formation. All of these bars go outside of this bar. Notice this is all of a 3 of this. And then you'll see the same thing. They gap it up. Here's your broadening formation. 2-2 reversal here. They come back and confirm it here to take these guys out. And then they make the new highs again. Then the 2-2-2, if you know the shotgun from the previous video, and then they confirm that. Gap up, sell, green to red right here to get short or cover. And the reason we do that there, not cover, but exit the long position. The reason we do that there is because we were targeting 145, which I definitely said would happen in that video where we talked about the inside week. So hopefully you guys are seeing what we're seeing as far as confirming and negating. It is a very powerful concept, although it's so simple, and it tells you what's actually happening because we want to know what are they doing this month and this year and this quarter. We don't care what happened before, besides the fact that we want to target shorts to get out of positions. What everyone else is doing is they're trying to draw lines all over the chart and figure out where they're going. We just want to know, are they buying? Because that tells us everything else we need to know. So if this video is helpful, let me know. If you would like some more clarification or any questions answered, feel free to drop them in the comments. And I will see you guys in the next video where we're going to talk about gappers, and then in my weekend video where we're going to talk about the new monthly and quarterly signals coming into the second quarter of 2024. So if you'd like that, don't forget to follow, subscribe, and turn on notifications, and that will be all. So I see you guys in the next vid.